G'day everybody, Brian here. One new video I just added, August 3rd, it is 3:04 East Standard Time. Just wanted to talk about my master, dare I say it, say a bad word, my top performing ETFs. 40 were chosen. Here's the performance. To me, it's not very impressive compared to all the other ETFs combined that I've seen. I've done all kinds of experiments. Part of what you have to factor in is the markets are fairly volatile, as you know, and sorry, I just got a needy chihuahua here. If you need to see him, here he is. Oh, there he is. Just needs affection right now. Anyway, sorry about that. So we got a situation where everything's fairly volatile, which is pretty surprising. This portfolio includes a lot of T-bills, or sorry, Treasury. So they're fairly stable. I've talked about them in the past. And, the return is not that impressive at 7%. I've seen ones that have been really high, but there's been a lot of volatility set back into the market in the last 2-3 months, where a lot of the trading baskets have had very good months for, let's say, for June, and really bad for July, or vice versa, depending upon the asset category that you're looking at. So this is why I think the Treasury was chosen as a more stable option. There is a bit of exposure to some markets, and I've already put up a video on that, but let's go over to what's really important, is this, a monthly return. So what we need to figure out is how to circumvent this. This is why I'm holding off on deploying live capital until I've got a better idea, knowing, better system on how to deploy capital to keep this from happening, a negative month. So as it stands right now, with the current upswing, I'm not sure if it's a bull trap. That's been very common in crypto, and as a result, it does happen in the mainstream markets, namely in the U.S. market indices. There's been some really good sectors in the commodity space, so I'm just playing around with this just to see what looks better to go with. So when I say this master, it's the usual top. It ends up being 40 ETFs that are all positive for the last number of months, and the ones that said that come up are Treasury. So I can't really explain that. I guess it's because the markets are more volatile and Treasuries are very stable. They don't perform. But as it stands right now, that's the way things are looking. Now, another big factor that's very important is I showed a video today about Forex. And Forex is not performing as well as it has in the last few months because the US dollar strengthened in a lot of the emerging markets, where their emerging markets are denominated in US dollar. Because the US dollar is strengthening, it takes away a lot of that pressure on those emerging currencies. So as a result, they don't perform as strong. They're more flatlined, and that shows in that chart. When I add those same pairs into the master portfolio here that I'm showing you, they don't get included into the overall mix of what should be added to a portfolio. So as a result, because they're flat, they're not the top performers. As I said, the only top performers are the mostly Treasury. So that's how it stands. So Forex right now is not as valuable. Currencies, those currencies or pairs are not as valuable. They're not giving extra any performance based upon what I'm seeing here. So the portfolio stays the same as if it didn't have any Forex, but I just want to throw that in to see if they would get added to this tear sheet, and they have not. So if you want to follow along on this type of ETF analysis and overall market analysis, just go over to quantlabs.net/ETF, fill out your info, sign up. And again, that's at quantlabs.net/info. Sorry, quantlabs.net/ETF. Okay, and it's very interesting. What you think may work doesn't work out, because as I said here, you got Treasury, a lot of it, and yet this particular basket is running a negative 1.77% so far in 3 days into August. So I don't like that, obviously. So again, just if you want to follow the analysis, just go over to that page, quantlabs.net/ETF. Thanks for watching.